In this video, I want to share with you 4 steps to build wealth during a market downturn. You're going to learn how you can invest with confidence and not fall into the fear trap that most people are falling into by overreacting with excessive fear during market downturns. You're going to learn how to manage risks and keep your emotions in check using these 4 key strategies. My name is Yvonne, and the goal in this channel is personal growth. So if you want to improve the quality of your life, click the subscribe button to level up. So let's talk about the first strategy. The first strategy to build wealth during a market downturn is to plan. Yes, plan. I want to start this section with a quote by Maya Angelou. She once said, "Now that I know better, I do better." You see, a financial plan helps you know better so that you can do better financially. Creating a personalized plan separates investing from gambling. Gambling and being risky with your hard-earned money is when you pick stocks by following a hot tip or trying to time the market. In other words, buying when it's high and selling when it's falling. Investing, on the other hand, is putting together a portfolio to meet your goals no matter what the market is doing. So ultimately, investing is a means to an end. You don't invest just for investing's sake. Its purpose is only to help you reach your financial goals. So that means you first need a plan before you begin investing. Otherwise, you're shooting darts in the dark. A good financial plan addresses these 3 questions. Where are you now? Where do you want to go? And this includes short-term and long-term goals. And then the third question is, what do you need to get from here to where you want to be? So although answering these 3 questions, your financial plan is going to capture, along with these 3 questions, your financial plan is going to capture your risk tolerance, what it looks like, what your time frame is, and if there are any income or budgetary restrictions to accommodate. This way, you have a criteria for investing. You don't just invest willy-nilly based on what other people say, because their personal situation is really unique to them. And they are investing based on their own personal risk tolerance, their own personal time frame, and their own personal income and budgetary restrictions, and their own personal, very different starting point and different financial goals. See, all of this factors into the fact that their investment approach and what they choose to invest in will look different than yours. So just because your coworkers, friends, or uncle invests in a particular stock, mutual fund, ETF, bond, real estate, and other investment vehicles, it doesn't mean that you should too. Because your situation is very unique and different. Your own personal, comprehensive, strategic financial plan will be your North Star and will help guide your investment strategic decision making. So the bottom line is your investment decisions are based on a plan, because we don't gamble our money. The second strategy to building wealth during a market downturn is to diversify. Yes, diversify. I want to start this part with a quote by Sir John Templeton that says, "Diversify. In stocks and bonds, as in much else, there is safety in numbers." There sure is safety in numbers. So what that means is you want to spread your money into different asset classes like stocks, bonds, commodities, cash, and real estate. Each of these asset classes, by the way, can be further divided into different subclasses that you can also invest in. For example, stocks can be subdivided into small, medium, and large cap stocks. Also, bonds can be subdivided into corporate, municipal, and government bonds. Both stocks and bonds can be further subdivided into regions like the US, Europe, Asia, and emerging markets. And also real estate can be subdivided into either land, residential, and commercial buildings. So there really is a lot for you to work with when it comes to diversifying. So there is no need to put all your eggs in one basket. So the point is, the fluctuations in the market conditions can impact some areas and not others. So as you diversify, you're really sheltering yourself from adverse effects that can come if you just invest in one place. You really shore up and strengthen your investment portfolio by diversifying your investment portfolio. Since you have no idea which sector or area will take the hit, diversification is that tool that reduces the volatility of your portfolio as a whole. The thing you want to remember is that you need to have clear financial goals, because how you diversify depends on your goals. The third strategy to build wealth during a downturn is emotional intelligence. I want to start this section with a quote by Benjamin Graham, and he wrote this in his timeless classic, The Intelligent Investor. He says, "The investor's chief problem and his worst enemy is likely to be himself." What you want to remember is that the overall direction of the market that matter is not what happens on a day-to-day basis. Okay, it's not what happens on a day-to-day basis. It's what happens long-term in this trajectory. And it takes emotional intelligence not to let your emotions get the best of you and stay the course even when you see market changes. And you hear people saying how bad the market is and how much it's dipped, but people will make investment decisions based on emotions, based on fear or greed. But it's important to keep your emotions at bay when it comes to investing. It really takes courage to stay focused on your long-term financial future instead of selling everything and getting out of the market when there are changes and fluctuations and volatility. Trying to time the market and guessing when it's hot, when it's hit its high peak, or selling when it's ready to fall is really not going to set you up for success. If anything, stress and anxiety. In fact, even John Bogle, founder of Vanguard and creator of the first index fund, said, "I don't know of anyone who has timed the market successfully and consistently." So instead of timing the market and giving yourself unnecessary stress and anxiety, step away from that television or articles that spell doom and gloom, and instead really focus on the long-term picture and remind yourself that the market will go back up, because guess what? They always do. So the best thing to do is buy and stay the course and trust that as long as you followed your plan, you will do well in the long run. In fact, in 2016, MarketWatch reported that investors with the patience and constitution to see their portfolio through a rough year should be rewarded regardless of the doom and gloom. So really, truly remember, those dips and dives in the market only matters when you sell your holdings. But if you're in it for the long run, over time, it will keep steadily climbing on an upward trajectory, an upward path. So keep your emotions at bay along your financial journey as you navigate these turbulent waters of market fluctuations, and stay the course by keeping your focus on your strategic financial plan, which really, at the end of the day, is your financial North Star. The fourth strategy to build wealth during a market downturn is to educate. There's a quote by Warren Buffett that I want to start this section here with. He says, "Risk comes from not knowing what you're doing." You want to make decisions based on knowledge, not decisions based on fear or ignorance. You see, if you're new to investing, learning about investing can be overwhelming and it's scary. Okay, so it is. At first, if at first it feels safe to just save money in a savings account, but with the inflation rate, the money in your savings will not be able to catch up with inflation rates. In fact, according to U.S. Labor Department data published in April 2023, the annual inflation rate for the United States is 5%. And this fluctuates. In fact, last year in 2022, the annual inflation rate was 6.5. So And current high yield savings account rates range from 0.25% to 5%, depending on the bank. So the national savings account rate is just 0.39% as of April 2023, according to the Federal Deposit Insurance Corporation, the FDIC. So what am I saying? In other words, putting your money in a savings account, whether it's a regular, a standard, or high yield, is actually risky because it's not going to keep up with inflation. And it's normal to feel anxiety and stress when you pick up a financial book and you don't really understand much of what you're reading. But you know what? That's part of a learning process. Stick with it. It's going to get clearer. Despite your fears and confusion, keep moving forward, keep learning little by little, and you will make progress. It will get to the point where you're going to understand the financial words. At some point, someone's going to say mutual funds, or you're going to read about index funds, ETFs, crypto, and you're going to know what it means. In a few months, you'll have a good grasp on the subject if you continue to learn. Small steps consistently taken truly leads to remarkable results. And you can do this by setting a goal to learn just a little something about money every day. You can, read books, maybe listen to podcasts, read magazines, listen to audiobooks, maybe watch videos on YouTube like you're doing now on personal finance. A little every day, even if it's just 5 minutes that you can spare. You're learning. Get familiar with top investment magazines and current trends. That's really going to help you really shore up your financial education. Also, try to have a conversation about money with friends and family that you know and trust, that they can have a constructive conversation on the subject. Also, whenever you meet someone that's financially savvy, you can pick their brain and ask them a few questions as well. Okay. Also, caveat, don't take investment advice from just anyone. You want to meet with an expert. So, a key resource that's worked best for me and others is taking classes, because it helps with getting the full picture of personal finance instead of getting fragments of information in different areas. Also, coaching and mentoring. It really helps with personalizing and customizing a plan that fits your own personal unique needs, behaviors, right? They find out what those limiting beliefs are that's kind of stopping you and help you get through that. That's why I've created and designed my signature money mastery program. Traditional personal finance education tends to focus on facts and numbers and truly ignores the inner work, the mindset, behavior, and the transformation needed to really build lasting results. It's more than just creating a budget. It's creating a lifestyle to build and keep wealth. If you're ready to invest in your financial education, this course is for you, because it combines getting the full picture of personal finance and helps you with creating a personalized financial action plan. Okay, and it includes group coaching to best support you. So you're gonna really build a nice network of like-minded individuals. I've curated and tailor-made this program especially for women who are ready to upgrade their mindset for wealth. This is an exclusive offer for high-achieving women that are really committed to their transformation to get out of debt, save more, increase their income, and invest to build real wealth. This exceptional and unique experience is really going to support you in having peace of mind, that comes when you have an action plan for your financial freedom. You're not just going willy-nilly on this. If you're ready to live a life of financial success and prosperity on your terms, click on the link below in the description box to enroll. Also, it's always great to have inspirational and motivational reminders to keep you moving forward towards your dreams and goals. So click on the link in the description box below to choose your favorite custom designed gift for yourself, family, and friends. I have this. It's one of my favorite. It's a doodle heart mug. And this doodle heart mug truly is one of my favorites. But you can check this one out or other designs in the merch store. So if you've enjoyed this video and want to improve the quality of your life, click the subscribe button to level up. And oceans of love. I'll see you on the next one. Till next time.